Assalamualaikum warahmatullahi wabarakatuh to Dr. Fazlida. My name is IZZATI binti Rahim. My team and I will be presenting on blockchain, which is one of the current issues in internal auditing today. Before we start, let me introduce our presenter for this topic. The first presenter is myself, Miss Izzati, followed by Miss IMAAN, Miss FADZLIN, and Miss Hanis Zahira. Without further ado, let's get started. I will start my presentation with briefly explain on the introduction of blockchain. What is blockchain? Blockchain is a system of recording information in a way that makes it difficult or impossible to change, hack, or cheat the system. It is shared across a network of multiple connected devices, which are known as nodes. So, how the blockchain work? When a transaction is added to the ledger, all other nodes will be notified immediately. Blockchain is designed to make it impossible to go back and change a previous entry. Thus, all the transactions can be logged, viewed, monitored, verified, and analyzed with blockchain. So, how does this blockchain is related to the internal audit? Internal auditors must understand blockchain technology and its audit implication, as it takes hold in a variety of businesses. Auditors will be involved in the auditing of blockchain technology and the retrieval of transactions from them. Furthermore, auditors must give assurance pertaining to the system control environment, as the software required to maintain transactions on a blockchain is complex. In addition, auditors should also focus on testing controls directly relating to the blockchain. The internal auditors can do a control testing in blockchain by testing the availability of blockchain data from different nodes in the network. Also, they can ensure the accuracy, completeness, and consistency of the data elements that are stored within the blocks. The next one is internal auditors can verify the identicalness of data obtained from different nodes in the network. Furthermore, internal auditor can test the access controls to ensure that only authorized personnel can view or update the blockchain. Next, internal auditor can test the process for adding new blocks to the blockchain. And lastly, internal auditors can provide assurance to modify previously approved blocks that are unsuccessful. Next, I will pass to Ms. IMAAN to briefly explain on the current issues in the blockchain.
Thank you, Izzati. Now I'm going to present on the current issues of blockchain. For the first issue is lack of awareness from internal auditor on blockchain. A survey is conducted by the Institute of Internal Auditors Audit Executive Center in collaboration with the Internal Audit Foundation and CRO. From diagram 1, the result shows that there is 76% of the internal auditor does not have any awareness whether their organization has been prepared to use blockchain technology. Internal auditor who answer no may not have any acknowledgement that their organization have potential in implementing blockchain technology. From diagram 2, most of them would describe that they don't have any knowledge and awareness on how the technology is operated as well as how it will benefit their organization. So, why this situation happened? The first reason is due to blockchain technology is still in emerging stage. This may be a reason for the lack of understanding from the internal auditors, since not all companies adapting blockchain for its operation. Besides that, most companies does not make adaptation of blockchain technology as top priority because they do not have a clear view on the importance of implementation of blockchain. The next issue is identification risk assessment by internal auditor is more complicated. Firstly, internal auditor need to assess the risk broadly compared to the traditional approaches, which is more entity focused. This is because there is possibility of other parties' exposure within the blockchain network. Secondly, adoption of blockchain technology is more exposed to the new fraud scheme, which internal auditors need to investigate in detail to mitigate this issue. For example, risk of cybersecurity. If there is a cybersecurity attack on the blockchain of a company, its asset may be stolen. And lastly, transactions that are recorded in the blockchain are not reversible. With no proper internal control implemented, internal auditor who cannot identify the deficiencies will result in risk of error of the blockchain. Now, I'm going to pass this presentation to FADZLIN.
Thank you, IMAAN AISYA. Now, I will proceed to real-life example implementing blockchain in internal auditing. The first use case is EY Blockchain Analyzer. The Explorer and Visualizer system support legal compliance and fraud risk by integrating search functionality with visualization technology. Internal audit teams can use this solution to look for specific transaction addresses and blocks. EY had technology and audit practitioner working together on this platform from the start to keep their technology and audit methodology aligned and meet professional standards. They need to integrate transformative capability into firm audit tools as technology continue to evolve. Using the crypto asset accounting and tax tool in 2018 to track cryptocurrency transaction and inventory better. The latest version of this technology can automatically calculate capital gains and losses for US tax purposes. Second case, PwC Blockchain Audit Tools. PwC Hello's data auditing suite includes by Bitcoin auditing. The program allows users to examine their cryptocurrency transaction and get information about blockchain transaction and balances. In addition to Bitcoin, PwC uses the tool to audit clients who use Litecoin and Ethereum. The technology is also available to non-PwC clients to assist them in executing the processes and control required to obtain insurance report from the auditor. It is vital organization digitize and auditor keep up with the market technology changes. The businesses developed audit tool that addresses evolving stakeholder needs and emerging technologies. Based on the real case that I have mentioned, there are disadvantages to using blockchain for internal auditing. An internal auditor examines a blockchain data reliability risk, influencing or modifying the blockchain. Blockchain technology relies on consensus to add transaction to a blockchain. The auditor should examine data dependability to determine a blockchain's consensus algorithm vulnerability. Next, depending on the nature of the transaction, recording it in a blockchain may or may not provide sufficient audit evidence. A blockchain transaction can be unauthorized, fraudulent, or illegal between the related party and lead to an end-of agreement.
Thank you, FADZLIN. Now, I'm going to present the recommendation on the alternative way to prevent future failure. In order to get a better understanding in technology, first, internal auditor need to understand that blockchains are a form of transaction-based data storage. Internal auditor will need to learn data retrieval methods to analyze the data and controls of blockchains. For instance, if a company uses a blockchain to manage its supply chain, the internal auditor should be able to obtain specific transactions from the blockchain in order to check its integrity and completeness. Second, internal auditor need to explore the implications to audit. With blockchain, every node has a complete copy of the data, allowing auditor to test the entire population of transactions rather than depending on sampling. For example, auditor should be able to trace transactions from the blockchain to the financial statements during completeness testing. A mix of data analytic and artificial intelligence technique could aid in fraud detection by recognizing patterns throughout the entire transaction population. Third, internal auditor need to embrace the reality that new technology will continuously change the skills of auditors. Internal auditor may require more training in order to comprehend the technology and its implication. The training is crucial as internal auditor in firms that have already implemented blockchain projects may be tasked with analyzing the data control connected with blockchain.
Next, in order to prepare for the new technology, first, internal auditors must be involved in the development of blockchain-based applications. All systems require good governance, risk management, and controls, and it is far easier to design them from the beginning than to retrofit them after a problem occurs. Second, internal audit departments must include continuous auditing as part of their standard audit methodology, if not previously done. Blockchain-based applications enable real-time access to data. Internal auditor will leverage this real-time access to transactions to increase the value they provide to their organization through continuous auditing. Last but not least, the relevant standard bodies will need to work together to determine the best strategy for ensuring that blockchain-based applications deliver the commercial benefit promised and do so in a consistent way with prudent and effective governance. That's all from us. Thank you.